My name is Walter Williams. I'm a HUD 203K consultant. And the video that you're about to watch came from a webinar to get the contractors informed about the 203K process. We talked about the draw processes, and we also talk about the expectations from those draws as you prepare the paperwork to submit to the lender so you can get paid. We also talked about the subcontractors and the importance of vetting quality subcontractors so you as the contractor will not be called back. So I just wanted just to let you know to just sit back, relax, and watch the presentation. And if you have any questions, please comment. Again, my name is Walter Williams, HUD 203K consultant. Enjoy the webinar. Good evening, everyone who's here. Again, welcome to Contractors 201 workshop. Basically, what this is a continuation of sessions that we had last year, well, actually past couple of years, teaching contractors the benefits of 203Ks or rehab loans. I know in my business as consultant that it's hard to find reputable contractors that is able to do the work in it, but within a specific amount of time. I don't. So let me start off. I'm going to share my screen, and when I share my screen, it's going to shed some light on who I am and where I come from, basically. So I'm going to share my screen. Let's go to this one. All right, let me know when you see it. Cool. This is who I am. Again, I've been in the business. I've been in the industry for over 29 years. I started off as a residential designer. When the recession hit in 2005 in Michigan, I know to some people it was 2008, but in up here in Michigan, it was 2005. I had to pivot because all the nobody wanted to do no homes anymore, so I had to pivot and do home inspections. So that's what I was doing, home inspections. And I became a HUD consultant back in 2009. This product pretty much kept my business afloat. It really picked up business during the 4 year time that I've been busy. So if it wasn't home, while the home inspections was dropping off, the consultant work just skyrocketed. And one of the reasons why it skyrocketed is like you said, Phil, the lack of inventory that's hurting everyone. The lack of inventory, and not only that, it's the interest rates as well. This generation don't believe that 7% interest rates is astronomical. Now I can't date you, but I could date me. I remember interest rates was like a cool 19%. And because it was that, we know how to adapt. We adapted to it. Sometimes we had no choice in the matter but to adapt. So to the generation of today, where they feel like 8% interest is kind of high, which it is, versus what we had. Persons like yourself, realtors, you have to find some other niche to keep the doors open until the economy rights itself. So the idea that came up into doing consulting work, and especially in Detroit, I know you have some in Redford, but I know especially in Detroit, you have a lot of distressed homes. And instead of like saying that, let's give it to the land bank or let's tear it down or something, if we can get that person, that buyer in a neighborhood close to where they want to be, but they can't afford it because the move-in ready prices is astronomical. So why not try a 203K loan? Now that's FHA product, which is a HUD 203K. There's conventional. They have one called Fannie Mae Home Style. There is a Freddie Mac product which is called Choice Renovations. And of course, the VA falls under the FHA. you have options that we can get those people, your clients, into the home of their dreams. So, having said that, that's where this passion of mine was born, in terms of letting as many people as I possibly can know about the power and the benefits on using rehab loans as a option. Notice I did not say replace, as an option. Because let's face it, based on the people I talk to, other realtors, mortgage lenders, they expect an uptick in business this spring. That's what the forecast. That it's not going to be as it was a year or two ago, when it was like, how it was like, people was bringing cash to the table, so they can go out and purchase that home, outbidding one another. It's not going to be that way, but it's going to be in the position that you can begin to do your job again, Phil, in terms of selling move-in ready homes. People got comfortable in people got comfortable in what's the word I'm looking for? People got comfortable in those interest rates now. So they're going to try to dip their toe in the water to trying to find that the home of their dreams. So I look at it from a standpoint as a consultant, that there are other options to keep your doors open, to keep your lights on. And even when the economy uptick has that uptick, what's wrong with using this product as a option for you to increase, don't have more generational wealth in your pocket? Just because you have move-in ready option doesn't mean you discard the rest. At least I hope that won't be the case. So, having said that, it was more along the lines of um, using this product as not an alternative, but as an option. I had my lender, one of my lenders supposed to be on this evening, but he had an emergency with his family. But I asked him the question. I asked him, say, what? Tell me the truth. I mean, what is the difference? Not the difference. Well, how long would it take from a normal process of getting a house from, for getting somebody to look for a home to closing, using the traditional way, move-in ready, versus a rehab, which is using this 203K product as as an option. So he told, one thing I like about him, he's a straight shooter, so he was honest with me. He said the difference is just another maybe 7 to 10 working days. So, as a realtor, wouldn't that if I choose to send my client to go that way about getting a renovation loan, if you know that it's going to add another 7 to 10 days, but long before you consider as an option, then when the client or when the buyer comes to you, wouldn't that give you an opportunity to say, okay, as they talk about what they're looking for, that what, maybe have a nice house have a nice house that's renovated closer to where they want to live at, within the budget, within their means, maybe as an option, as opposed to a moving ready home that they're spending much more money on. So that's why I'm here this evening, is to encourage, is not only encourage you, but at least give you another arsenal in your portfolio to say, okay, you know what, if a move, I could show them these moving readies, and that's fine. But if I know that house down the street may need maybe some light renovations, maybe that, because you know how it is, people want to get that perfect kitchen or that perfect bathroom, or depending on the situation, an addition, or a basement remodel. Maybe a rehab loan will solve that problem, as opposed to, okay, I just get them in the house. I got my commission. I'm gonna keep on stepping. It's just an option. So, so that's why, so that's why I'm doing this broadcast on, doing this webinar on, you know, teaching our contractors how to be better so they can accrue generational wealth. Now, since there's no contractors on this line right now, that's okay. because one thing is this being recorded, and hopefully that the information I'm about to pass out, you'll just take it, absorb it, and tell your subs about it. One thing I noticed, and especially in the city of Detroit proper, there is so many homes that need to be renovated. So many of them. If you go over there, the Dexter area, over there, Dexter and Davidson, and you see those duplexes, or some of them are quads, and they just say, and you seeing people renovating it. Most of those people don't live here. They come from out of state. They investors, so they want to invest it. They want to turn. Well, I don't want to say lipstick to a pig, but they want to take that eyesore and turn it into something they can call and have that rental income. So I just wanted to say that this may be an option for you, Phil, that you can tell a potential buyer that if we can't find A, then B may be a better option. But you have to put your imagination glasses on, your imaginative glasses on to make this work. So let us talk about um, draws. Now, you're not too familiar with the process, but let me explain the draw process from a contractor's perspective. Under traditional methods and means for a contractor, they get paid twice. They come out there, they assess the situation, they come up with a price for the buyer or the borrower, whatever you want to call it. They agree to the price, so they ask for a deposit. Give me 30 to 50% deposit, and you pay me the balance when the work is done. So they give them that money, and they do the renovation. Once the renovation is done, the contractor expects to be paid, and the borrower or the buyer will pay them. That's under traditional methods and means. Because doing the 203K is a little bit different. The money that the buyer has been approved or the borrower has been approved, that money is going to escrow. So instead of, and these rules, depending on the product, these rules are designed to protect the borrower. Because in this field, unfortunately, we always going to have the 1%ers that's going to abuse a product. So this is no different. A brief history lesson. In the past, I heard horror stories when, a loan, a lender, they found a contractor to do this work for a 203K for a borrower, and they gave them like 50% of the materials. Now, 50% of materials is like, depending on the project, that could range from like 15,000 to 60 or 70,000, depending on the project. The contractor walked away, never saw him again. So HUD felt like they can't allow that to happen under their product. So what they're asking is they wanted that money that the borrower been approved, it goes in the escrow. And when they get paid, they send somebody like myself, the consultant, to go out there to review the work, to inspect the work, to see if the work is being done in a professional manner, to see whether or not that the paperwork is in order. Like when the city come out there and do their permits and they do their inspections and they pass it, just make sure the paperwork is in order. As a role of a consultant, that's my job to make sure that not only that the borrower is being protected, but the lender is being protected. So when I come out there and do an inspection, I inspect the work, and I get the paperwork turned in, get signed, get the signatures from the borrower and the contractor. They'll get paid. The contractor will get paid based on the work that is done. So in some instances, what do the work to be done? What does that mean? Well, that's a good question. It means basically that when I come out there to do a draw, and let's say the electrical work, the contractor is charged to put a new electrical box in the house, and not only electrical box. Let's say GFCI is in the kitchen and the bathroom. When I come out there to do that inspection, and you only got the box done, but not the GFCIs, then the contractor would get paid a percentage on the work that was done. So that's just an example of that is just an example of what a contractor will go through. So here's something else that will help as well. The expectations of a draw request, of a draw process, basically. Those expectations, especially from your perspective, Phil, as a realtor, you don't want to tell your client anything that's going to do negative vibes to you. You know what I mean? You don't want to tell anybody that you work with that contractor, APC contractor, is going to do shoddy work. You don't want that to happen. So if you're going to I don't recommend contractors, but what I do, I give my clients, if they ask me if I know any, I give them a list of contractors I worked with in the past. And so they will do their diligence. They can call them. They can ask for references. And not only that, they can feel comfortable in working with that person. So that's very important as well, that, it's a relationship. And like all relationship, from time to time, there's going to be some ups and there's going to be some downs. But by the end of the project being finished and they get the keys to move into their home and it's what they want, that's priceless. You can't write a script. You know how it is, Phil, when you sell that person that house, and when you give them the keys, they just so elated, they excited. They got the house what they're looking for. Same thing here. But only in this case, the contractor finished their work. They're happy. They got paid. The borrower is happy because they can move in with their family and start living out the dream. All those things is part of what we do. So the expectations of what I'm expecting from my contractors, it's just common sense stuff. So let me give you a couple examples, Phil. When I tell a contractor, when they do a job, I would tell a contractor, if you have an issue with myself or with the lender, or I'm sorry, take that back. If you have an issue with the borrower or the lender, reach out to me. That's my job as a consultant. My job is to go out there, if it's an issue, for me to investigate. The lender charged me to help get this job finished within that allotted time. So as a consultant, it's my job to make sure if any issues come up, handle those issues so the project could be moving forward. So I encourage all my contractors, please reach out to me if you have any issues. Reach out to me, so we don't want no hard feelings down the road. Believe me, it got to be justified for you to have those hard feelings. So don't create something is not there yet. Have that conversation. Give me a call. If we got to get on a Zoom call with the borrower or with the lender to hash it out, that's part of my job as a consultant, to hash out those issues so no hard feelings will be created in doing this renovation. The second thing I would like to say about expectations, I don't know if you heard this or not, but one of the things that I see in my line of work is, we call it mission creep, or in this case, scope creep. And what if you know what I'm talking about, all that is the borrower and the lender agreed to the SOR, which call it the work write-up, but they call it specifications of repair. They agreed to it. They start working. The borrower will come out there and look at the work, see how they're progressing. But they start talking on the side and say, you know what? It wasn't in this original SOR, but is it possible you can open up my dining room into the kitchen so I can have a clear shot, open floor plan of the kitchen, right? It wasn't in the SOR, but they make the side deal anyway.
I highly, 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 highly recommend don't do that. And if you do, don't wait till the last minute. The job of the consultant, my job, is to make sure that that work is being done in a proper order in an acceptable manner. When a contractor first start a job and they start opening up walls, they start tearing out shingles, and you discover something that wasn't in the SOR, we have a thing called contingency reserves. It's exactly designed for that in case something goes wrong. In a renovation loan, a contingency fund could be either 10% of the loan up to 20%, depending on the condition of the house. So it's designed for those unexpected circumstances that occur. Now, when it occurs, we have to get pre-approval from the lender to tap into those funds so we can take care of those problems. Now, here's the good part. If you could have just waited, or go back to the first one, reach out to me, I can guide you to the point that maybe towards the end of the project, and we make sure that those funds wasn't tapped already, that we can open up that wall and the borrower can have the house of their dreams. But if you do it without pre-approval by the lender may not pay you for the work that you've done. And that would be left between the borrower and you, the contractor, to get your money, to get compensation for the work that you did. When you call me out to doing this draw and it's not in the SOR, I can't release the funds because I'm going by the SOR, the specification of repair. That's my document. So I want to remind you, please, 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 if the borrower come to you and say, I want something done outside the SOR, please reach out to me. And I can help explain to them, as well as yourself, why. Or maybe we'll do it later in the project as opposed to in the beginning. Oh, I'm not putting you to sleep yet, Phil. I'm messing with you. I like to have fun, man. One of the things about doing this business is, we talking about a large sum of money. Just like
Yeah, no, this is good stuff. Yeah, this wasn't exactly what I expected, but I'm learning some stuff, so that's good.
I
Good.
appreciate you. Thank you for thank you for sticking with me.
All
Thank you for
right.
sticking with me. Let me go to number 3 about the draw process expectations. As a contractor, once you get the okay to do the work, you should have had a meeting with the borrower to go over all of those items that those items that they expect to have in their home. So you know what I mean. You meet with the borrower. The borrower got some swatches of tile or colors or cabinetry or whatever. That's when you get everything together. You put together your materials list so you can order that stuff. Now, I highly encourage you, have a document separated of what you agreed to and have it signed by both parties. And the reason why I'm encouraging you to do that is because you don't want no problems when you order it. You get it installed, and the borrower all of a sudden will say, that's not the color. That's not the style. Now, you don't want to go through that headache. I know I don't want to go through that headache. But I also understand the fact that if it happens, and if you don't have it in writing, there's going to be some problems. So I want to nip those problems in the bud by saying that please, whatever you do, get it in writing. Get the signatures. Now, this is within the SOR. So this is not outside the scope because that has happened too. That things that were said verbally that will not hold up in court, you need to have it in writing. So if I'm going out there doing inspection on that same electrical panel and you say that you want to get paid for dimmer switches for the new light fixtures, and it wasn't in the SOR, you're gonna have a problem with that. especially it wasn't pre-approved before you purchased it or you did the work. But even then, the borrower may come to you and say, well, that's not the fixture I ordered. I ordered something else. So where's your proof? So it doesn't happen all the time, but it has happened. So I'm highly encouraging you. Please, if you're going to go through that material list for that home, get whatever you decide to do in writing so you'll be protected. Now, let me be clear. I'm not beating up on a borrower. I know it sounds like I am. I'm not. Because here's the thing. The borrower, there's certain things there's certain things they don't know because they're excited. They see in their home getting converted from a house into a home. They very excited. You help them pick out the products, to pick out the materials to get the work to get the work started so it could be exactly what they envision. But as a contractor, you have to understand you don't want no shade going back to you if it goes sideways. That's why I highly encourage you, give me a call as a consultant. That's what I'm here for, to hash out potential issues just by letting me know. Like, hey, Mr. Williams, the borrower want me to open up a wall. Okay, no worries. Hold on, let me check something out. I go into my work write-up, look at the specification of repair. I don't see anything pertaining to open up a wall. But having said, that doesn't mean no. It just means let me investigate further. And that's when I get to work, reaching out to the borrower, see where their mind at. Then I go out to the lender to see how much money is left, if we can do it off of the loan or not. That's a process, guys and gals. It's a process. So I just want to encourage you again, when you run into an issue, before you start talking, reach out to me. And maybe we can do this together so there won't be no hard feelings down the road.
Hey, a quick question, Walter.
Yes, sir.
Do all 203Ks have a consultant like yourself, or is that just based on the lender? Does the lender use it?
Okay, well, I would say there's a thing called HUD roster. In the state of Michigan, I checked earlier this week. There are 41 consultants in the state of Michigan. And out of the 41, I think it's about 8 of them is in this area, I believe. Now, let me be clear. Am I any special person than any other consultant? No, I'm not. I'm just a person like anything else. But like any other business, would I like to get the job? Absolutely. I'm not crazy. Still got to keep the lights on, keep the family fed. Yeah. But I also know that the other consultants on the roster has either more experience or less experience than I do. They may do more contractual work, more design work. It depends on the expertise. One thing I would say that whoever the lender is, because that's when we get involved, when we get a call from a lender to say that I have a client that might fit the needs, or a borrower trying to be proactive by saying that I like you, I like what you talk, I like how you speak, I like how you make things plain. Let me refer you to my lender. Then we have that conversation. But as a consultant, we cannot do anything without the lender giving us the blessing to do
What
so.
I'm wondering is it typical for the lender for 203Ks to have a consultant, or is that not typical?
Okay, on a full 203, for a full 203K, it is mandatory.
Okay, all right, so that's pretty typical.
You're talking about jobs that's going to, especially these days, they coaching over 6 figures, so they need that additional safeguard to make sure their money being well spent.
It's a great idea. That's why I wondered that if they, what I was wondering is if I get one and they don't have one, how could I get one? But it sounds like most of them have it, so that's fine.
Well, again, that's whoever is financing that project. In your case, that I know you have a group of lenders you deal with, ask them, do they do rehab loans? Because here's the thing, a lot of lenders don't. I know the big banks don't. Citibank don't do it. Bank of America don't. And that's okay. But we have other lenders that specializes in this product that can help your client. So that would be something I would recommend to you, Phil, is if you run upon a situation that you may think a 203K may help, then hey, call me up. Hey, I got something for you. Can you help me? Can you steer me to a lender that can help me and all that? I have resources. I have lenders. I have contractors. In order to keep, in order to keep this process going, you got to have a roster of you got to have a roster of people that is willing to go the extra mile for your client. So that's a great question, Phil. Thank you. Thank you for asking it. Now, I want to say something else about subcontractors. In our profession, subcontractors is important. From a lender perspective, they focus on the general contractor. So when a general contractor, their qualifications, it used to be a time that they used to have a HUD roster for contractors, but they do not have that anymore. But what the lender is looking for, they're looking for a contractor that got to be a general contractor, we'll be clear. They're going to be licensed with the state of Michigan or a license with the state. You got to have insurance, and you got to have capacity to do the job. So what do I mean by capacity? It just means that if you're going to do a $300,000 renovation and it's a 4-family flat, the lender may ask additional information outside of the ones I just mentioned to make sure you're able to handle the job. Unfortunately, because of the economic times that we're in, more lenders are asking additional items in their vetting process just to make sure you're able to handle that project. So I want to encourage you guys and gals, I want to encourage you all that when you go through the process, when you submit documentation to the lender, just be ready to receive those additional questions. I could be able to help you with that. I could be able to help you if you know that, because I get these calls sometimes that I get a call from a contractor saying that, man, I thought I had the job, but the lender asked me for some additional stuff. I don't have the capacity. So I may have an answer or two instead of you just drop off the job in the first place. So before you make that commitment, reach out to me. Maybe it's something I can help. Like I said, I have lenders that works on the one end. I also have lenders that may help out, borrow money from them. Because there's some lenders that I know that give contractors some seed money to get started on the job, if money is the issue. So I just wanted to say that as far as your subs go, just make sure your subs are what you want them to be. And I'll give you this quick example. I had a client that a job went sideways. And one of the reasons why it went sideways is because while the general contractor was away, the subcontractor and the borrower started having conversations, and they were like, let's do this for me. If you can do this for me, then I give you some money on the side and all that stuff, whatever the case may be. But it went sideways because the sub never relayed that to the general contractor. So when the general contractor had to get rid of the sub, the borrower was trying to figure out what happened. What's going on? Who's going to do this? But the contractor didn't know. The consultant didn't know. The lender didn't know. So we don't want the borrower to be on the hook on anything. So I just wanted to let you know, just be aware of your subcontractors. Be sure that they don't promise to do something that you have no clue what they promise for. And some of those items they promise you're going to come out of your pocket if it's not under the SOR. So I just wanted to keep that in mind. Um, do you have any questions, Phil? Any other questions?
No, the one I had was that's pretty much it so far. You're
Okay,
doing a good
no
job.
worries. Good news. We're going down to this home stretch.
Okay.
Listen to my contractor buddies. I want to give you 3 reasons why you should put this thing called rehab projects in your arsenal. That's going to guarantee you getting generational wealth for your firm. One of them is you can do more if you hire a crew. And what I mean by that is this: if you have like a if you have a 2-crew operation, and under your traditional methods and means, if you could hire an extra crew to do your rehab loan stuff, that's generational wealth because you're able to do more you could accept more projects. And you knowing that if you're going to do this thing called rehab loans, that's guaranteed money. And what I mean by that, since the money is held up in escrow, as long as you do your part, that's guaranteed money. You're going to get that money when that phase of the project is complete. So I just want you to understand that that's a possibility to grow your business, to be a more of a positive impact in your community. You know, you also have the ability, if you take on more projects, you can hire more people in your firm. You may need an additional secretary. You may need to, of course, hiring more subcontractors is good, but you may want to hire call centers, or you may want to hire other aspects of your business because your business is growing because you're taking on more projects. Now, I mentioned those 3 things, but I want to just segue one about mentioning this one thing that will help out as well. For those who don't know me, I want to be perfect. I want to be transparent with you. I believe that God put us on this earth for a reason. And I don't want I know I don't want to segue into religion, but this is a belief that I have about us being the owners instead of an employee. When you have a chance to be let's put it, when your business grows, then you're going to need people to sustain that business growth. Why can't it be you? You know, I deal with contractors that have crews. I deal with contractors that sub out their work. I deal with contractors that's a 1 or 2 man operation. But if you add this thing called rehab projects into your portfolio, I will virtually guarantee you that your business is going to grow at least 30% because you're accessible. You are ready to take on these projects. Now, guaranteed just means what it is. It's guaranteed. Now, are you ready to receive it? That's why we're here this evening. So, again, my goal in this whole presentation is to produce options that you may want to explore into getting generational wealth for you and your family. You know, right now, Detroit is about to explode. It's going on right now, but it's so much. The city is so big. We all can get in on it. Don't let it just be to the outside investors coming in here and hiring people that's not in the community to do the rehabs. You in this community, you see what's going on. You see the opportunity present itself for you to grow your business by just doing rehab loans. I didn't say stop the other business, but if you have the open-mindedness to say that, let me take this project on. I'm here with you as a partner to help you go through the navigations of doing your first rehab project. Because I guarantee you, once you do the first one, you'll never go back. That's how easy it is. And we still talking about guaranteed money because the money is put up in escrow. And the only thing you got to do is what's in that SOR/work write up. I come out once a month to look at your project. And if your project is on point, you get paid for it. How sweet is that? So I'm going to open it up the floor to you, Phil, to see if you have any other questions or comments you'd like to make.
No, I was trying to think of so who did you send what I was trying to think of how to find some contractors. Who did you send the email out to?
Oh, well, I send this email out to all of my contractors in my list.
Okay.
It's one of the things I make a requirement of, because they ask me to refer them. And I give them my answer. Sure, I have no problem referring you after I check you out. But even after I check you out, I'm going to go information your way to help you grow your business. So while we was doing this presentation, I got several phone calls from people say they couldn't get on to the Zoom call and all that.
Okay.
So that would be fixed. Hopefully by the next one I'm going to have. Next one I have is next month, which I'll tell you about in a few minutes. But I'm doing this to be proactive because I know, again, like I said, I had one realtor had an issue with his family. I had a couple of people calling, couldn't get in the Zoom call. I'm like this. I can't keep this to myself. That's why I'm recording this session. So if they want to have access to it, they'll have it. Because I'm just an ardent believer. If we want to take our community back, you got to have money to do so. And it doesn't make sense trying to go borrow money for people who don't want us to succeed in the first place. Get your own. And I guarantee you, you'll be a more positive influence in your community what you leave credence to. I cannot wait that I can get into Redford because I know we got some distressed homes in Redford. I know it. And again, I can't wait for business to perk up. So you can go to your clients with an option like this. Right. And the only thing I'm asking for, as a consultant, is just consider it. I'm not asking you to change your model, how you do your business. I know when you got more move-in readies and inventory, it's going to be highly competitive. But the only thing I'm asking you to do is just think about this as an option. Because let me tell you what's going to happen. If that person find a home, let's say over there by Beach Daily, by the golf course, Beach Daily and 6 Mile. But it was outside their price range because it was move-in ready, everything's done, no worries. But if you go 1 block south or 1 block north, or 1 block east or west, and you see a house that's in distress, or don't have to be distressed, it just needs some little work to be done. Right. You can go be that hero and say, you know what? I know the house doesn't look like the potential, but you already love the neighborhood. So let me give you an option. Let me go out there and throw this rehab loan option out there to you. Because what's going to happen is you're already pre-qualified because you got to go through the lender anyway. Right. Once that's done, you get the right consultant on board. You should have a roster of contractors that they dealt with. Get those. Not only get you a contractor so you can bid on the project. Use the consultants once, so you have because I always tell my clients, get 3 quotes. I don't care how you get it. Get 3, because you especially going to spend a lot of money. You want to make sure you're going to have a relationship with that contractor, just like you need to have a relationship with that consultant, wherever you want to go with. Everything is relationship based. You don't want to go in a situation that they don't want to hear what you got to say, and you paying them to. Nah, right. That's not right. So
okay. Well, I'll if I run into some contractors, I'll let them know, because I doubt a lot of them are even aware of this. So
no worries, I'll take them all. Because that's how strong I feel about this product. It's like this. It's information. I'm not asking for no money. I'm not asking for anything, but If you give me a few minutes and you see that this may not work for them, then pull me aside. Say, hey, Walt, this ain't happening. I'm happy where I'm at. I'm gonna say, hey, no worries. Don't pressure here.
Yeah, I did learn. So I didn't know exactly how it worked, but with the consultant, that actually makes me more confident in recommending a 203K, because that's a big deal, having a consultant bridge the gap. So this is
Hey,
good stuff.
you know what? Like I said before, it don't have to be me. It could be anybody you feel have a relationship with.
Right.
No, should it be me? I'll be saying, hey, I won't be lying and say, hey, I wish it was me. But one thing I do know, the more you know, the more you can go to your clients
Right.
more armed about how you're going to do service by them. Because at the end of the day, it is about them.
Yep.
At the end of the day. So whether you use myself, my services, or other consultants, we're all in this together. It's just a matter of finding the right one for the right fit.
Yeah.
Now,
okay. Appreciate it. Go ahead.
Oh, no, it gets better. This is the end of the presentation.